Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, making it a couple of minutes past 1100 UTC. And what a wonderful thing to come on to in the show this morning. Just the comment section absolutely pumping with loads of good, kind, familiar faces that we know. And I'm sure there's a load of others there in the background as well. So don't hesitate to speak up, to say good morning to this lovely lot. But it really made me smile this morning, guys. Hans, Erica. Good morning, guys. Knit as well, sliding in there. GOT whack. Our lovely Kelly Barker as well. Craig, great to see you on there as well. Josephine Crooks, hey, how you doing? Great to have you on the show. Really made me smile this morning, guys. Thank you very much. That was a unbelievably fun way to start the morning, seeing you all there. So, thank you very much for that. What a brilliant way to start the week. I hope you all had an amazing weekend. After quite a flat sort of recent period, as we can see here, we got the daily chart up. Learning, you too, buddy. Have a great week. What a lovely energy we get in this every week. So look, we had this whole period of just flatness, didn't we? It was just chopping people up left, right, and centre. There were some nice low time frame range plays, but one of the difficulties was it was very, very illiquid in here, meaning that you were getting sweeps on sweeps. It was very hard to get in and out of those low time frame positions. Some people traded it really well. It was really, really tricky though. Little bar, less volatility. Yeah, blessings to all, my friend. GOT, BC. Brilliant. I had a question for you in yesterday's BTC report. In the medium time frame, you highlighted the inside bar on the 4 hour as a range to watch, but you didn't highlight the daily inside bar on the high time frame chart. Is there also a reason why? Yeah, sure. So I'm guessing just because of the recency at the moment, we're talking about this one, are we, Geo? So if we were looking at this would be our daily. Make this a little bit thicker. Inside bar here, yeah? So this would be the inside, this would be the mother bar, obviously, and then this here would be our inside bar along here, yeah? Which is absolutely right. So, interestingly enough, the reason that I didn't bring this up on the daily was because after a really, really big move like this, especially when you have these really, really large inside bars on a daily scale, the expectation is for there to be some kind of consolidation after you have a big move, right? Whenever we see these kind of larger moves, right, you see this big expansion here, price kind of chops around here for a little bit. In the same vein that you get, if you look back at any of these moves, right, very, very often after a big move, you get a point of consolidation. Now, often after these big moves, as we can see in both situations here, and this is just something, guys, as you just spend so much time behind the charts, it's always really good when you kind of notice patterns like this. So I'm just going to draw these in, right? So we had our big expansion, yeah? This then, the expansion candle then left this inside bar here, yeah? So we've got our inside bar pattern that's followed. So if we now go and look at another example of that and we go up to here, and we can see the same thing here with this, what I would call kind of like an expansion inside bar, right? Meaning that the big impulse candle is the main one that then sets the mother bar. Now, it's not that they're to be ignored by any means, but what you will typically notice is that in the direction of the expansion, price tends to get quite sticky towards the top of the range. Yeah, that's because when price has kind of like an abnormally strong move in either direction, that point of consolidation below that is there for a number of reasons, right? Is people, offloading positions, closing down positions, taking losses, hedging. So that's when you get that kind of consolidation, right? That's price's way of kind of having a little pause, taking a breather, and then working out if there really are the buyers there or the sellers there to really kind of drive that thing forward. So when we get these large high time frame expansion candles here, that form these inside bar patterns, then yeah, they're absolutely 100% valid. You would definitely look to trade the inside bar first. But for me, I wanted kind of, when I share these reports, or as much as I'll consider these things, what I've found is to try and keep them a little bit more relevant within the kind of the immediacy of plays, right? So to give that more context, basically, if we look at our 4 hour, Yeah. Now, it's not to say that this inside bar isn't going to come into play here, but what can happen is sharing information like that, people will kind of sit in and not saying that they follow me absolutely gospel by any means, but some people will kind of sit there and say, like, okay, these are the levels that we need to watch, right? We need to wait for this to be swept, this one, or this one. Now, while that's a good high time frame view, you've got to have a little bit of the experience about you to then, because if Prices comes along and does this, right, she's very capable of doing for a while before maybe running one of these and then having a reaction like that. What you're going to do is you've got this whole kind of trading area here that people have a little bit of a tendency to ignore. So you're absolutely right, and it's a very, very good spot for you. You know how much I love an inside bar. But looking at this on the 4 hour, just hide these for a moment. Here we go, 4 hour inside bar, right? This for me, I felt was really going to kind of come into play with some kind of immediacy, right? And ultimately, what we've got here, if we overlay these levels and then you kind of put the other levels over the top of it, it can just get a little bit messy. So, excuse me, you raise a really, really interesting point though, because it's some of it, Geo, is more about kind of what you choose to share over all the information that you have, right? So for me, my focus was, okay, let's get into Monday. Let's see how Monday's range plays out. We've got our inside bar on the 4 hours, so we've got some pre-made levels. Again, we can see how important the excuse me, apologies. We can see how important the inside bar was on this one, right? So we set the inside bar here, deviation, ran to the highs. Yeah, ran the highs, ran the lows, ran the lows, ran the highs, run the highs, run the lows. So just for the sake of some visuals, yeah, if we're just going to look at this in green here, we can see that basically every deviation, yeah, and this one was slightly deeper, fine, so we'll put that down there, has been met with a return to the far side of the range, yeah. So once again here, are we going to get this move? If price comes back in the range here, then the natural target is going to be to look for expansion higher. All right. The other factor that we've got here now as well is while we're playing out this inside bar range, and remember with range trading, our typical kind of rule, or a couple of rules that we would look at, if we deviate one side of the range and come back within the range, we target the far side of the range, yeah, but always making an allowance for the equilibrium, yeah. So in which case for this, yeah, that's our EQ, just the 50% line on a Fibonacci, yeah. And we can see here, you can see the bodies of these candles when they get underneath, respected, sells off, closes above, comes down. So that's something you want to be aware of. Now we've got that on our higher time frame, which is our larger part of the range, which is our mother bar range, which is this dotted line, and that's where price is currently sat. Yeah, we can see that it's just sat in here. So for the sake of it, we just want to kind of jump into recency at the moment, right? If anybody's got any questions about this and anything they want me to describe further, please do let me know. Darnog, good morning, my friend. How are you? Well, yeah, good afternoon. Yeah, so it's always going to be the morning somewhere, though, mate. So you can definitely get away with it. So yeah, if I'm looking at this as a range, then after a large drop, we expect a period of consolidation. Price is coming back within here. But no, it's a really, really good point, though, Gio. A really, really good point. Looking at those kind of high time frame ranges. And what I would do is I would have that high time frame range set up on the daily. And then I would go on to here, if this was on a daily chart, go on to my visibility and just leave the range on, but just remove it, on some of the other time frames so that it doesn't get too obtrusive. But then you can always be aware of it, just set alerts. And then anytime price engages with that, and you're like, if we're running a daily mother bar, for example, say this was on a daily and we're running this high, then that's going to be really, really significant. So that's how we can take a look at that. So yeah, it's going to be an interesting one at the moment. I think when we look at this and we drop this down to an hourly, remembering that this is a 4 hour, inside bar, right? So if we're looking, one of the things to remember, if you're setting these, you've got to make a couple of conscious decisions here. And that's, do you require a close back within a level, or are you happy to look for low time frame structure? Now, the tighter the range, and what I mean by that is if we've set this on a 4 hour and our parameters are that we have to wait for a 4 hour close back within the range, well then let's look at this. We would have had to wait for this candle to close to get this tiny move to the high. Yeah. Right. Then this candle closes back in here. We would have taken entries here for a small move to the low. The risk to reward just wouldn't really be there. This was quite a nice one. We get a pin bar closes within it, but still it's a small move down. So the way that we negate that is that we can base it on market structure. So very simply, we can set rules and parameters to follow that says, okay, once we engage with a key level, which we can see obviously on this chart, this is our inside bar and our mother bar highs and lows. So let me just get rid of these. Right, then we can see here and we say to ourselves, okay, well, all of a sudden we've got a lot more information here. So how would I look to trade that? I would look to trade it the same way that I share with you guys every week. I'm a very, very simple creature and I like to keep these things super simple, right? So for me, I'm looking like 5-minute chart is a really, really solid chart for me. So we're going to start right at the beginning. We're not going to cherry pick anything. We're just going to use this inside bar range and we're going to do exactly the same entry techniques that we've always looked at, right? So for that, the idea is that first of all, we would like to see a sweep, right? So that means we can see that liquidity has been taken out, right? Then we want to see a change of character, market structure shift, yeah? So I won't label them all up. I'll do this first one so that you guys can see it. But then after that, I'll just do it as the same line so we can look to run it. Yeah. Now, I would personally be looking to enter this on a lower time frame, right? But sticking with the 5-minute, if we're looking at this, yeah. So this is our leg up that takes market structure here. This is the impulse move down, right? Now, remember, internal liquidity targets are really key. Yes, we've got this little low here, right? But ultimately, we need to respect the fact that this is our target, right? We're looking for the inside bar low. That's where the clear and obvious liquidity is resting. So when price comes to a halt here, yeah, because remember, we're imagining we can't see this price action moving forward, we would take our Fibonacci, yeah, and we would draw it like that. And what does this do? This is our premium discount range, right? Meaning that we want to be short from here and we want to be looking for longs here, but always in line with our high time frame bias. So our high time frame bias is bearish. Why? Because we're in high time frame bearish market structure, right? We've now run a key level that we're looking for a bearish reaction, and we've had that bearish reaction. We've had a sweep of liquidity engaging with a key level. We've shifted market structure. Now what we want to do is we want to identify the area, the key area that we can look to be a seller. So when price extends a bit lower, yeah, which we get here, and people say to me sometimes, like, okay, well, yeah, but how do you know when to stop the range? How do you know to stop it here, 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 or here? Just wait for the opposite candles, right? So in this one, it's a down move. So we wait for the first green candle, or in my case, white candle to close, and then that's where our range is set, yeah? Then if price fails to retrace to our target area, we keep following it down, right? However, if we'd engaged with the range low, yeah, that's our target, we would cancel this idea, yeah, because liquidity's been taken down here. Our ultimate assessment here is that we know where our risk is, yeah. So our risk is above here. What do I mean by that? Excuse me. It means that we're wrong, and that's where our stop loss goes, yeah. Because if we're looking to get short from up here, then where are we wrong? Price gets back above here. So now we've got our range. Where's a key target within this red box? It's our 5-minute fair value gap, yeah, which is this. So as we extract that across, this becomes our entry. And then our stops have to go just a few points above the high. Now, the next key question is, do we have at least a 1R down to here? We do. So because we've got a range trade, which means that there's a much higher probability because it's based on mean reversion. Yeah, it means you've got a much higher likelihood of a higher win rate when you're trading a range, high to low, than you would in a trend-based system. Trend-based systems will have a higher risk to reward, but they will typically have a lower win rate. Your range trader, your mean reversion systems will have a lower risk to reward, as we can see by this 1.16R, but you have a higher likelihood of it reverting. So what happens? We take our trade, we take our position. We've got to bear in mind as well, guys, that our risk is capped, But our potential upside isn't. If we break out of this range and we look to purge lower, we have these downside targets here, yeah? So we have this here, we have these unswept lows, we have key lows resting. So we might get a larger move, meaning that we can close, yeah, some of our position here and move our stop loss to entry when we run this low, okay? So we can see we get out down here, yeah? And again, the blue lines here, guys, represent the New York trading session for me. That's where I'm really looking to get involved. So now we have the same situation at the lows, right? I'm not going to go over this too much, but just to really give you some context, what happens? The reverse situation, our low is run here, yeah? So what does that mean? What do we want to see? Well, if the low is run here, so the price comes down to here, we then want to see a high taken out, yeah? So we need to look in here and say, okay, well, where's our high? So this higher is higher than that to the right and that to the left, and then price trades below it, okay? That's always a good way to identify a key high or a key low. So now we have this expansion move here, yeah? So do we get a fair value gap down here? We don't. Price starts to break down. Fine, no problem. What do? We re-engage with the range low, still within our New York trading session. So we move our attention and focus over here. Here's the high, yeah, or you can use this one, yeah, not exactly a standout high here, right? So you don't want to cherry pick. You say to yourself, that's a clear and obvious high, long candle, yeah, flanked by two lower highs, and then price trades below. So when we're in here, we're now saying, okay, well, our theory remains the same. Here's our expansion leg higher, right? So here's the last down candle from the move. And this is the up candle that then trades back down. We don't exceed that. We get our down close candle here. We now want the first available fair value gap. Yeah, it sits within here. We can see we get tagged in here. But obviously, before we would set that limit order, we need to know that by having our few points below the swing low here, do we have that risk to reward going higher? We do, okay? And then etc. Right? You would see this. You see the sweep of this higher. This one's actually a beautiful, beautiful trade. This is a really kind of textbook one. There's your low. There's your run on the high. Sweeps the highs above here. Also this local high. Here's our displacement leg lower. Here's our premium discount range. Where's the highest fair value gap that sits in here? Oh, it doesn't actually quite make one there. So I was wrong about that. It was almost, we just get snuck out of it. See this one down here? And you'll get this sometimes, guys. So you have to kind of learn to live with it, unfortunately. Well, with this particular system, because you would have that, you would be tagged in here. Your swing high is here with this one, right? So a few points above that one, you're ultimately targeting the lows down there, right? Beautiful 5.47. But you will get tagged in on those as well. And you will lose these ones as well, guys, yeah? So it will just, price will reverse on you, it will take your stop loss. Don't worry, just keep persevering, right? Look at this. Brilliant example here, right? So, okay, the difference is here, and this is why, for me personally, time and price is very, very important, right? Because we sweep this low here, we get our structure break here, we get this beautiful fair value gap in here, yeah? That triggers our long position, our stop loss goes below here. With a trade like this as well, you've got this beautiful clean high here, so you can look to run this up to here, being aware of this one. But price ultimately reverses. We can see it looks to get into the buy program. It looks to really trigger, invite the sellers in, but ultimately price is too weak. Now, the reason for that, and guys, never ever see these kind of setups and get disheartened, right? You'll remember with a system like that, if we just traded this range here, yeah, and we look at this here, look, we have a 1.16R win there, right? You have a 2.36 win. Okay, we didn't get involved in this one. That doesn't matter. So we're already up over 3R, and we lose 1R here. We're still at 2R up. You've still doubled your money, even if you were just trading that for the week. Now, before I digress any further, one thing that I will say is a contributing factor here is the fact that this was done in the London trading session, yeah? So I don't typically trade London with crypto. I find London sessions can be absolutely fantastic for FX, which was a really, really, really brilliant and fun experience over the last kind of month or so, trading that with a prop desk team that we put together at the Bird Nest. Really, really challenging, but some really, really great people. But with a real kind of focus now back on crypto, I do really like to trade these New York sessions. Yeah. We look at the London session here for crypto, see how it's a little bit choppy, a little bit flat, right? This session here was wonderful for the London session. We got that big drive, big reversal. But ultimately, it kind of just set the scene for then when we step into New York, we reclaim ourselves back in the range here. Yeah. So looking at the same kind of principles, if we were playing this and saying, well, look, we've broken back into the range here. Again, market structure, right? We've had a very low, let me just zoom in a bit. We've had our low sweep here. Yeah. Taken out that low. Just draw that in for you so you can see it nice and clean. Swept the low. Structure break to the high. Tiny little fair value gap in here. So I'll just draw in for you to make sure. Yeah, see that little slither in there? All right, you can take your entry in here. Ultimately, I think you would have wanted to target this one slightly lower down. But in these kind of situations, if you have a really strong breakaway, what I will often do is if I've noticed price start to run really hot recently, meaning that basically it's struggling to get in positions because it's running really aggressively, which can be a sign, again, of illiquid markets, then what I look to do is say to myself, okay, lower risk to reward here, but I'll enter two positions. I'll split my order. I'll put 50% in here at the higher price, and I'll also set a limit order down here in the lower fair value gap so we can kind of tag ourselves in. Yakuza Kana, hello, my friend. Good afternoon from London. Hope you are well. GOT as well, brilliant. All right, fantastic. But yeah, really, really good spot on that inside bar pattern. And again, a lot of it will come down to kind of recency and ideas. But what I would do is set that daily one and then set alerts on those levels so that if any point you're engaging with it, you've got a mechanism that triggers off and then you can be straight at the charts. Hands, yeah, hoping we take out liquidity below. Yeah, definitely. I think they're... yeah, I'm not really sure today. I was saying the idea around about kind of watching the range kind of start to play out and stuff. But I think, let's see, just hide that. We've kind of got this ready-made level here that could show us if we're going in as well. Klaus! Fantastic. Oh, I love your picture as well, Klaus. That is a fantastic book. And that was a brilliant day. We just had our garden, just done our garden ourselves and kind of got a really nice little Orisha type thing out there. A lovely chill area that's all surrounded by some nice exotic plants and that. Sit down, get a good book out, have a good read. Husky sitting over there in the on the rattan corner sofa and just super chilled. Actually, Hans would appreciate that as well because I was actually drinking some Hansa beer that day as well, which is a beer that we typically have when we go to South Africa. So I think what Hans is alluding to here is that we've got resting liquidity sitting right down here, right? But you'll notice that I do this on the charts sometimes, which is an old teaching of ICT's, which is this, right? And he calls it an LR, low resistance liquidity run, yeah? And as a simple preacher, I just do that. And then what it means is, you see this untapped low, untapped low, untapped low, untapped low, while people are really, really kind of sitting down and often looking for these kind of key lows and that, which are really, really good things to target, right? But when you see these, yeah, price loves to run it. Yeah, it just does. Even here, right? Look, we have this build up, this accumulation of it here. What happens? Price runs up here to just take this high, and then comes into this area as well, right? It's the idea that you've just got stop losses building up here, right? Of people that are getting into the move a bit later. And obviously, whenever you get into a move late, you have a risk that you get one of those liquidity runs on your stop loss, generates more liquidity for people to buy in the other direction, right? So basically, you've got these are all buy stops. They come in, gobble them up with sell orders, and then flush the price down low, all right? It's how institutions like to work, is how smart money likes to operate. So they're always really, really good areas to look at as well. You can see another example of it here, right? Which is really interesting actually, because price is kind of looks like it's working its way up here, doesn't it? And then people start to get on board. They're like, okay, we're structuring up, got a clean high here. Price is clearly going for this high. What happens? It blitzes all of that, takes that liquidity. Look at this big downside wick showing you how aggressively the buyers stepped in. And by the time price flies up to here, it doesn't give these poor people much chance to get back in. All right. Hey, Craigie boy, great to see you though, mate. I hope you have a fantastic day and see you guys on Wednesday. Um, I did some gardening this weekend as well. Nice, very nice, Hans. I miss being outside in South Africa, be that beautiful sun-kissed weather. Erica, BC, your TA brought me some nice money last week. Not at all, not at all. That is absolutely music to my ears. I have a saying, and it sounds really cheesy, right? And I'm probably heard this somewhere. I don't think that I have. I can't coin it as my own because it's a very, I'd imagine it's been said before, but money is a byproduct of success, right? And by success, I don't mean, rolling around in a Lamborghini. It's sitting down, it's spending late nights, getting early mornings, working weekends, studying, and just absolutely pounding on your craft, right? Meaning that you just work as insanely hard as you can to change your life, right? Now, maybe trading's that for you. Maybe it's something else you're really passionate about, right? Met so many amazing people in this industry, from fashion designers and engineers to coders, developers. It's just people from so many different walks of life. But if you really, really work hard at something, you really, really put your time into it, and you don't rush it, you can have something in here that's a skill for life. And I think for me, that's, there's a saying, isn't there? If you give a man a fish, he can eat for a day. If you teach a man or a woman, obviously, how to fish, they can feed themselves for a lifetime. Now, I'm not saying I'm that person to to teach you all of that. I think there's loads of really, really good educators out there, and it's always a really good way to kind of get your head in the game and take a look at it. But I love seeing that from Erica. Someone that's worked so hard on this stream, that's been here every week, constantly asking good questions, looking at ideas, researching, and then just slowly but surely you use small little positions, and then you start to build your confidence over time, get used to executing live. Don't rush in, don't expect to be handed anything on a plate. Work hard, know your craft. And that's just the best. That is the sweetest music to my ears. That really is. So, Harvinder Bra. Unfortunately, mate, it's not really one of those shows. We're not here to sort of give out trades. We do it as a group. You can do it at the Bird Nest. You can go and grab a free trial. You can go and get trading calls delivered directly every single day. If that's your kind of thing, you can go in, you can get involved on the Bybit link, you can get them for free. In fact, there is something in the description that will be very much for you. The stream today is very much focused on education. If it's only calls you're interested in, you can get that, and you can get that directly from the Bird Nest. You can go and find that in the description below. What I would say is what I say to everyone, though: don't be reliant on getting calls from other people. Yeah, use it as a way to generate some income in the short term. I would personally use that income to invest in your education, and then really, really just work as hard as you can for months and months and months, and as time goes on, you'll start to get comfortable with these things. You'll start to spot your own trades, be able to balance your own portfolios, and then you really do have a skill for life. All right. So, guys, do we have anything, or are there any particular charts that stand out to you guys today that you're looking at? I know we've covered the kind of range today. Actually, saying that, something else I wanted to share with you. I've gone over it a couple of times in the last few weeks, I know. Let me just... let's pop these down and do this as Monday's live show. Include those as well. So the bias idea, right? So what's the date today? 21st, isn't it? Perfect. Now, this is something that I got a really, really good response to. And it's something that I used to do, something I refreshed recently with an old ICT trading friend that I've got, who's also a professional trader. A lot of very similar kind of concepts to me. Trades very, very differently, but when it comes to sort of high time frame work, then it's a really, really, really good thing to do if you're in kind of less clean price action. So let's just drop our inside bar for a moment. And just have a completely clean chart, right? So we're here on the daily. Now, a lot of people will say that they will look for market structure shifts, yeah, or market structure breaks, all right, meaning confirmed market structure base. Now, the tricky thing with that sometimes is if we look down here, for example, yeah, so what have we got? So price is obviously lower highs, lower lows, yeah. Now, we have our shift here, but technically for a confirmation, yeah, we need to wait for here. Right, so let me just expand that out a bit for you. Yeah, so price comes down, lower low, lower high, lower low, higher high, higher low. So technically the break of this high is then when you're looking to get bullish. However, what you'll notice is at that point you've missed this whole expansion leg up, and you're then looking to trade bullish whilst heading straight into consolidation. All right. So obviously market structure is a factor and something that we don't want to ignore. And when price is trending, it's really, really, really good. And we always want to stay with the trend, right? We need to remember the trend is our friend until the end. All right. 1 second. However, the trend isn't always there. I think 70% of the time we're in the high 60 percentile. Price is ranging. All right. So that's why it gives us more ranging opportunities. So, what else can we do to establish bias? Well, what if we just look at the candles and their state of delivery, right? So, whenever price runs a key level, yeah, so key low, yeah, swing low, swing high, swing low, swing high. Now we've run this, and we can see run liquidity here, failed to break the high. Ran liquidity here, ran liquidity here and here. Now the difference here is when we're bearish, yeah, we expect price to run highs, yeah, or re-deliver from fair value gaps. Yeah, so let's look at this example here quickly. There's our bearish fair value gap. What does price do? Price sells off. Yeah, we first of all get a small liquidity run here. Price sells off, leaves a fair value gap, trades up into it. This is our opportunity to get short, targeting stops below this low. Yeah. Now, price continues to sell off further, so we look left. What have we done? Taken out a low below here, and we've rebalanced this fair value gap here, right? So ultimately, we see this strong reaction. Now, where's our first real kind of change in the state of delivery here? It's here, this fair value gap. So remember, we're still bearish because we have a bearish bias. We have to because of structure and the way that price is delivering. Price comes down here, comes into our fair value gap, bearish. Yeah, that's the delivery, delivering from this FVG. Now, the expectation would be the same here. Price comes up into this daily fair value gap. However, doesn't deliver us bearish price action, does it? Yeah. Price comes down and closes above it. It also does this, right? And I'll do this in green just to make it, just to symbolize the fact that it's a bullish fair value gap, right? Now, that then gives us a balanced price range here, but also the important thing here is looking at this inverse fair value gap. So price then closes above here. Our target, or what that's saying to me, is that price is then seeking liquidity higher, right? This is the next clear and obvious swing higher. So that's what I'm aiming for there. Ultimately, I'm then aiming for here, but what am I looking for? I'm always saying about where is price delivering from, yeah? So, bullish fair value gap, but this is where price is delivering from. Until this is closed below, all we're looking for is price to deliver bullish from here. Where to? Well, here. But what we can see is that price ran this in this move higher. No problem, because we're then saying, okay, well, is this respected? We see that it is respected, so ultimately we would then zoom out even further, looking for liquidity targets on the left as price starts to expand higher. Yeah. Good morning, Moral. Putting on some hairspray. Brilliant. Why not? I did dabble with a bit of hairspray from time to time as well. Nick, hi mate. You mentioned the liquidity area labelled up as dollar, dollar, dollar. When would you not treat that as a trend? Oh no, okay, no, I've probably just not explained that very well there, Nick. So if I'm looking at that, right? So see this area here, yeah? Just label it up as price is working its way down here, basically from here to here to here to here. Right, and this is what you'll see, really, really typical, like standard trend lines as well, right? And that's why trend line breakouts can be so powerful. Look, what happens? Resistance, 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 closes above, has that expansion move higher. What we're looking at here is we're saying that we've got stop losses, yeah? So there's loads of liquidity resting here. There's liquidity resting here. There's liquidity resting here. So what we're using this for is a target, and we expect at some point price is going to come and wipe all of that liquidity out, yeah, before potentially reversing. So that's how I would look at it, yeah. So it's just more looking and saying like, okay, the price is compressing lower and lower and lower. We're ultimately taking out the sell stops here, yeah, which are turning into buy orders, and then it allows larger players to come in, take those positions, and then attack the liquidity that are resting above these highs. All right, mate. So please do let me know if I've not explained that clearly, and I'll go over it again. But that's what I'm using it for, like a target. But like I say, you will see that typically as traditional kind of market trend lines as well. Now we have a fair value gap from 24k to 21k. Yeah, it is going to be pretty big, to be honest. There's a lot of inefficiencies to cover off here. We can see this move down here. Often these fair value gaps do get rebalanced, right? In the same way that when we see these fast moves up or fast moves down, it doesn't have to be immediately. But if we look back historically, yeah, big moves up, even that to a degree gets retraced to here, right? This move down, large inefficiency, fair value gaps here, price refills this. This move down here, right? If we take the low of this wick down to here, you can see that it was almost perfectly filled there and price came back for it later. Now, they're always a target, guys. There's never an expectation for this to pay out every single time. As we know, price action doesn't work like that, but we can just put a set of parameters in that allow us to take kind of high probability setups. Ahmet. Yeah, hope that's answered that for you, mate. Again, definitely an area that I'd be aware of. However, if I'm looking at this in terms of kind of like recency and where price is at the moment, this downside wick here shows a lot of buying power as price ran this level, meaning that a lot of people had bids around here. Now, we had these equal lows here, which is kind of our last point of which price has run some form of liquidity. So while we're delivering in a bearish state, which we are, yeah, let's look at what some potential trade setups look like for today, shall we? So this is our bearish fair value gap. Yep. Which is our daily. So we're going to label that up fair value gap daily. Yeah. Now, from here, for me, that tells me pretty much everything that I need to know. Sorry, Ahmet. So the price, must the price go down there for the fair value, or can it go up without taking them? Yeah, no, it can do absolutely either, my friend. Basically, the best way to look at these fair value gaps is rather than kind of looking back on the chart all over the place and saying like, oh God, we've got one here, we've got one here, is price going to come down to do that? Focus more on the recency, yeah? So what I mean by that is when we had this expansion higher, we left this fair value gap here. My question becomes, is price looking to move higher from here or looking to move lower, right? And I don't assume to know that. Yeah, there's forces well beyond my control that will have an influence over that, yeah? But ultimately, even if we allowed for this fair value gap, just as an example, now we're here, price comes into this, we're bullish, yeah? I'm not looking for any bearish trades when we engage with this. And I don't care if we engage with it here or much deeper. What I'm saying to myself is while this is relevant, price comes in here, engages with this, yeah? Then while it's in here, I'm then looking for my next higher liquidity target, yeah? So we're delivering from here, meaning that I'm targeting these highs, right? But on a lower time frame, yeah? We see price ultimately runs the highest of these and then comes back down to the fair value gap, right? So while this fair value gap is still valid, I need to look for reasons to flip my bias, yeah? So first thing I'd want to do is see a low run. We engage with the fair value gap again. What do? We would look to trade to these highs here, yeah? Which when we zoom in on a lower time frame, we would get our little dollar signs here, yeah? See these? Sorry, I have to change that. It's going to really tweak my OCD out, that is. Yeah, so when we go in the lower time frames, that becomes our target. So all we're saying is our high time frame bias is bearish and is bullish until proven otherwise. And for me, if I'm doing this purely on a daily scale, yeah, we can see in here we don't have any other fair value gaps. This is all very well balanced, very efficient, yeah. So while price is ping-ponging around in here, I'm looking for easy to reach internal targets. Now, when do I flip my bias to bearish? Well, when we come down here Have we got any fair value gaps in here? No. We've run liquidity. Yes. Price runs liquidity of the lows here. So remember, my theory is very, very simple. I'm looking for price to reach for liquidity in the form of stop losses above old highs and below old lows, or to engage with a fair value gap. So my bias here flips from bullish because we were holding this fair value gap. It is now bearish once we set this bearish fair value gap. Yeah. Now, the next thing to remember is we have a change in the state of delivery here, right? Meaning that we've gone from delivering from a bullish fair value gap to higher prices. We've now created a bearish fair value gap, yeah? And price engages here. We trade it down to the prior lows, yeah? Price comes down here, it comes back up. Notice how we're not closing above this. The bodies are respecting it, right? This is showing us that we've got bearish momentum, right? The other thing that we've got here as well is our bearish order block. So do you see how when we're telling the story of price here and where price is delivering from, yeah, we can give ourselves a real helping hand. Now, we see here price delivering from here and here, bearish, so we target lower prices. Delivering from here, lower prices. Still can't get above it, lower prices. There's one other thing that we get in here that I really like to see, and that we talk about a lot on the lower time frames, which is this. Right? And I'm going to do this in purple. And I'm just going to get rid of this for a moment to clean this up. Now, price comes down here, and our expectations change here because we set this bullish fair value gap, right? So for the time being, let's do this in green. Now, we've set this bullish fair value gap. That has recency, right? Meaning that this is recent price action. And for me, that overtakes previous price action. We've also seen that in setting this bullish fair value gap, we have closed above this old fair value gap, right? Meaning that we would either look to that to turn from support if we were to attack it here, or we would look to ignore that as long as this bullish one holds. When do we change our bias again? Yeah, so what price trades down into this, we look for price to trade higher. It doesn't. It takes out our stop loss. We have a losing trade in there, yeah? But we get beautiful information, right? Think of it almost like a tax that you're paying the market. I remember in South Africa, Hans, if you're still there or anyone else has interest in my random ramblings, we were diving with huge and amazing numbers of sharks off of Protea banks in KwaZulu-Natal. And one of the dive guides there had a few days previous had jumped into the water to check the bait line and to go in and see what sharks were around. And as she got into the water and down to the bait line, a huge mako shark, which are basically these really rabid looking smaller great white sharks, came flying past her, and she shot back up onto the boat. And they're all laughing and joking about it. And out there they say, you know, occasionally you get a little rub from a shark, you might even get a little nip or something, but typically they're incredibly friendly and incredibly pleasant to dive with. And I've fortunate enough to dive with them a lot. And she came back on the boat and not scared at all, not flustered, just not ready to get in, waited for things to calm down. And they said that it's the tax that you just have to pay the ocean sometimes for the pleasure of being in it. Yeah, you have to be aware of that. And I love that saying. And I kind of transferred it to trading a little bit, yeah, in terms of, you know, this losing trade here, we can throw our toys out of the pram and we can say, yeah, but hang on, we've got a bullish fair value gap here, right? Price shouldn't be carving through this. Price should have come in here. I was long here and I was expecting to take out this high or maybe higher, you know. That's how it should work. Markets just unfortunately don't work like that. But if you have that view on it, what you typically do is skew by looking at your... because you're trying to enforce your will on the market, yeah? You're saying, I should be bullish here. This should be bullish. Forget it. Let's say we've taken a losing trade here. Well, what happens? We've taken a losing trade here because price has closed below our fair value gap. And look how well the bodies respect this, yeah? So what happens here? It gives us this glorious gateway into our next trade. This now becomes an inverse fair value gap. This is closed below, meaning from this candle's open, which is this line here, we're then attacking... stops below here, stops below here, stops below here, right? Then what happens? We get this fair value gap, still bearish. This fair value gap, still bearish, yeah? So whilst we're below this, we still have to maintain a bearish bias on the daily scale. We now drop that down onto the 4 hour. Just have a quick look through the questions. Awesome, Erica, awesome. Ahmed, what we're seeing now, you think we go down to fill the fair value gap? You think we're going up? Let's take a look. Let's work through it together, shall we? And Hans, that is why you first need to look in the water before jumping in. But hell, what? Yeah, you do. Yeah, you really, really do. It's. I remember we did a rib dive there off of Protea, and basically we rolled straight off the back of the boat. And it can be really choppy out there. And don't call it the wild coast for nothing. We rolled straight off the boat, and we're doing a negative entry to make sure we can really purge down quite low and not get caught in the chop because the drifts there, the currents are insane. And as we drop down, we're kind of going through all this, all the commotion, you kind of, all the bubbles clear away. You look up from about 5 meters under the water and realize that you're in a shoal of about 3,000 hammerhead sharks. And it was just one of the most amazing experiences I've ever had in my life. We just got down underneath them and just watched them all migrate across the top. It was just, yeah, it was insane. But very good advice. I think I might take a little periscope next time to stick in the water. So let's take a look together, guys. All right, we're just going to continue our top down here on Bitcoin. And see what we've got. So remember, we're just employing the same principles here. So for me now, trading BTC, I'm stepping into Monday and I'm zooming in here. All of that other stuff on the high time frame is now irrelevant to me, other than the fact that we are high time frame bearish. Yeah. So now we have to say to ourselves, okay, well, what's our bias on the H4? Now we're focused on a couple of things here. We've dropped below here, bearish fair value gap, price is being compressed. However, not compressed, suppressed, kept lower. What we notice here for the keen-eyed amongst you is that we have a bullish fair value gap. So how I will be looking to trade this today, and I will definitely be trading it with caution, I can assure you, because we've had such a big move, right? And quite often it pays dividends to watch and wait to see how Monday's range develops, yeah? Oh, absolutely. Yakuza kind of, yeah, FX, crypto, anything. It just the study of price action, looking at kind of how price moves across different assets. There are different dynamics to them and different things to consider. But yeah, absolutely, it is something you would use across all asset classes for sure, and definitely across different cryptos. We can take a look at a different one in a minute as well. Maybe we take a look at ETH, or if anyone's got one that they particularly want to take a look at. So, Ahmet, when we're looking at this question here, my friend, in terms of how we're developing our bias, if we're using these same principles today, well, this is a bullish fair value gap, right? This should be supporting price. If it doesn't support price, yeah, then we have a few ready-made targets here, right? Yeah, so I'm going to leave them on there and say that they're our downside targets. Now, what do I want to see here? In 10 minutes' time, yeah, I want to see this 4-hour candle close below this fair value gap. If it does that, and remember, it's a big if, yeah, and we want to see a body close below here, yeah, not just a fraction. You want to see at least a little bit, something that's giving you a signal that this has now changed, yeah, from a bullish fair value gap to an inverse fair value gap, meaning that we expect it to deliver bearish price action. Oh, let's all lock that up. Thanks, Hans. Yeah, I mean, those guys out there are the real heroes. One of the guys took me free diving, right, and made it sound we were going free diving for crays, or what we would call lobsters over here. He made it sound like we were going to some calm little rock pool, dive in, no issues, grab them, come back in, stick them on the briar. As we just turned up, and then he's just like, no, we're swimming through that rock pool and out into that mad open ocean. And you just got massive sharks swimming around you. I mean, you get bumped and stuff by the stuff out there. And I was also effing useless at getting crays. I was out there like a flubbering wreck for about 15 minutes, getting smashed into rocks and just bumped by sharks, and then basically swum back in while Kyle then went back out on his own to go and get them. We didn't get any, and then realised we could basically buy them for like, a few $100 off some guy that had shrewdly gone up and got them when the tide was better. So this is what we've got. Now let's imagine that we get the close below here, yeah? Then what I'm going to do is I'm looking to then drop down onto a 15-minute chart. Let me just pop the session breaks on. 15-minute chart is on. Session breaks are just signifying where we've got our day breaks, yeah, here and here. Now, what we can see here is we never really took out that liquidity, that clean low there, or this one here. So what I would be looking for here, and I'm using the 15-minute to establish where these clean highs and lows are, right? So there's a couple of things that I'm thinking. One is that, as we discussed before, we're kind of making that nice, those nice liquidity pools here, right? So if price holds this fair value gap, right, then on the 4-hour close, then we want to see this held above. So if it holds above, then quite simply on a 5-minute chart, I'm looking for price to break structure. Yeah. And then we would look to get involved attacking these highs. If, however, price does the opposite and we get the 4-hour close below, yeah, then let me drop onto a 5-minute to show you pretty much exactly what I'd be looking to do. So let's imagine we get this close below, right? And price is here. Price comes back down, we get our 4-hour close below. Well, what we have here are a couple of very ready-made trigger points that we can look at. We've got a bullish fair value gap here. So what we could say is, well, if price comes down and violates this, breaks structure on the lower time frames, we can look for the fair value gap that's left in this move lower. Yeah. So we've set that low, we've broken structure, we've inversed this fair value gap, yeah. And within that move, we leave a bearish fair value gap. We can look to go short here, trading into these lows, all right? However, the opposite is true. If we reclaim this, like we said, we've got bullish structure. So let's look at an example here. When we engaged here, for example, we've got our bullish fair value gap, in this case, because it's an inverse fair value gap, yeah? That's if it inverses. We need to remember that at the moment, we need to make this green because it's still a bullish fair value gap until we get that 4-hour close below. So green box, we're expecting the bounce, yeah? We come into it in our New York session, nothing clean here. Ultimately, we come into it here. What do? We sweep a low. Yeah. Market structure shift as price is moving higher. We come down to rebalance this fair value gap, and then we're attacking liquidity above these highs, right? That is exactly the same kind of move that we would want to see in here. And we can see at the moment, as we're now approaching the close, look at this coming into here, right? The expansion. Typically, when you want to see expansion like this, you want to see two things, volume and speed. And when I'm talking about volume, I mean looking at the bodies of the candles, right? So sometimes people really do just forget to look at the candles. When you're in a downtrend here, look what happened. We get these big bullish candles come up, yeah? That's not necessarily a sign you want to just flip bias, yeah? Because you've got a ready-made target down here. These can be big players stepping in to pump the market up to the levels that they want price so that they can reverse it, yeah? Not saying that they're going to, but we need to remember that. However, we ignore all the noise by just simply zooming out, yeah, and looking at our 4-hour chart. Now look how different this candle looks now. Do you remember this candle? Like literally a couple of minutes ago when we were looking at it and we're saying, do we get that close below? The body was trading down here, right? It's trading below this green box, which is our bullish fair value gap. So now this is looking like a strong close above. I'm favouring long positions up into liquidity here. How would I trade it? Very bloody carefully, because we've had a big drop, yeah, and we still need to remember that we're countering the higher time frame bias. So how we would do that is I would be looking to trade to the simple and easy targets, meaning that if we get price here, let's say we close the 4-hour, we leave this 5-minute fair value gap, yeah, price draws into this, I can take a long position in here with my stops below the swing low here, but my first point at which I'm going to look to engage is going to be this high. Because I still need to always respect the fact that the higher time frame is still bearish. Yeah, we haven't got a higher time frame turnaround yet. Yeah, on a daily scale. The 4-hour is flipped, however, which gives us enough to attack intraday targets, meaning we would look at this high here, this high here. However, only if we hold this area. And for me, let's say we leave this fair value gap, yeah, and price moves up a bit more, I would look for it to attack here, but I would then be looking to enter this on like a 1-minute chart, looking for a pattern like this. Yeah, a sweep of the low, a reclaim of the high that took the low, yeah, and then trading up first of all to here. Now, I wouldn't necessarily take all my profit here, but I would certainly be looking to close some of the positions out and moving my stops to entry, because if this is a larger manipulation, meaning that price is being pushed up to here to reverse, we've got out with our scalp for the day, we've booked some profits. If we come back down below this and we do flip this bearish, then all of a sudden we're in a much stronger position to trade this lower and get back in line with our high time frame bias. All right, guys? Does that make sense? So it can be a really, really good way to use this on a daily and a 4 hour and say to yourself, rather than just wait for the signs of a recovery of market structure, to take a look at where price is delivering from and how it's delivering. Yeah. Because we still need to remember as well, a lot of people will be jumping into this move already, but we've got 3 minutes left. Yeah. This candle could still come and close below, meaning that the 4 hour candle, yeah, which again, look at the difference in the 4 hour candle. If you spend too much time on the lower time frames, you really start to miss this. Yeah, in 3 minutes' time, this candle could still completely rip down here. That could have been a manipulation pushing price higher to try and engage people to buy before price closes back below and attacks the sell stops down here. Yeah. So we'll wait a couple of minutes before we close off the stream so we can take a look and see how that plays out. Let's see if our ETH chart wants to load today. It was really giving us some jip last week, but just to have a very, very quick look on that as well. I imagine price action is going to look fairly similar across crypto today. I mean, you can see that massive wick down here, right? When price really had that purge. Now, what I will say is I've been very vocal about the point that I've been looking for lower prices, right? And the reason, a big part of the reason for that is because, just when we look to the market structure, looking at that Bitcoin every day, and we're saying to ourselves, okay, well, we've run the highs. We're really struggling to get above the highs that were capping the market, and we had these big fair value gaps below, right? Meaning that was a natural draw for price to head down into. And when it didn't, then we kind of left ourselves in a position where we're saying, okay, price is still consolidating. However, when there is a big move, you want to be ready for it. Now, what I will also say about that is that I do think that this was very much a kind of a news catalyst as well. We had the Evergrande information come out, which means that they're filing for bankruptcy. For those of you that don't know about that, that is China's biggest property development firm. And I mean biggest by country miles, billions, if not trillions of dollars, right? The government's been propping up for a while. They've taken money to build a lot of houses that now aren't going to get delivered. It can have really, really, really big impacts. Yeah, sorry, Erica. I think for some reason, StreamYard just kicked me out. Let me pop that back up for you guys. And yeah, just 1 minute now till the close. Looks like we're going to get this close above. Yeah, so when we get that close above, we just wait for a minute and then we'll just take a look and see what the kind of setups look like. If we get this close above and price tanks completely below it, then obviously I'm going to be a bit more cautious about entering those positions, right? And here we go. So we've got the close now, right? So by that, we've established that we've got our 4 hour fair value gap. That is supporting price, meaning that price delivering from that, yeah, is delivering bullish price action whilst we're above it, yeah? So again, we're not just going to look to just completely dive blind into the charts, but we can go down here and say, okay, well, what does this look like then? Yeah, we've got our fair value gap in here. Do we see price retrace down into that? If we do, we can then look on a 1 minute chart. That's how I would certainly look to trade it anyway, is I drop down to a 1 minute chart and then I'd be looking for entries in here pushing higher. Other people, breakout traders, will enter here with stops down below this low. Yeah, first of all, targeting this high, I would imagine, then look to get involved in the expansion. But you can always, and it's going to look a little bit ropey because, and actually you can see there's more volume in Bitcoin already. These candles, for anyone that trades low time frame charts recently, will realize just how awful they've been. You know, very, very sketchy, lots of gaps. If we go back a bit, see these? All these flat body candles. Yeah, really just thin, really thin, almost kind of like mechanical PA, yeah? Yeah, exactly, Hans. Just like the impact from last time when the bad news came out. And that's what the Evergrande thing's done, because basically Bitcoin is a risk asset. It's a beta risk asset, meaning that if the markets, if we're in time of prosperity, which we're not, you know, we've got the geopolitical situation in Russia, we've got economies struggling, we've got inflation out of control in most countries, we've got rising interest rates, meaning that the average person, excuse me, has less money available, meaning that typically that doesn't reflect overly well for risk. But there are still typically opportunities, right? So the key thing here is saying to ourselves, okay, you're right, the market is very indecisive, and that's because it can kind of be played both ways. And what we're looking for here is we're looking for the correlation. So we can see here, looks like we're getting this expansion higher now, which is quite nice. So again, just showing you guys how that is and how I use that to set my bias for the day. Yeah. If we closed below this, I'd be looking for the price to search out liquidity lower. But as we sit here, we know we've got these nice highs here. We look to trade into them, and then we can just look to scalp some profits nice and quickly. Excuse me, 1 second, guys. Just to finish off, one of the other things I would say here is, have a little look on traditional markets as well. I think, look, the correlation is sketchy with crypto, right? But the DXY, the S&P 500 can be really key. And there's no shadow of a doubt in my mind today that when we look to this, the DXY would be withdrawing. So that means that's the dollar index. That means that's the dollar currency weighted as a basket of against a basket of other currencies, which is slightly heavily favored towards the euro, meaning that if the dollar is strong, it can be seen as a sign that the money is fleeing to risk-averse assets, yeah? It's going for the safety of the dollar. If the dollar is weak, it can be interpreted that it means a good thing for risk assets, yeah? So that's the NASDAQ, yeah? Which is heavy on technology stocks, the S&P 500. And as we can see on here, S&P 500's up, NASDAQ is up, dollar is down, meaning that maybe there's a decent appetite for risk. We combine that with our TA and knowing the fact that we've seen a big flush in Bitcoin recently, we put them together, and then that's how we kind of look to our low time frame charts to execute for positions. I'm becoming even more interested round about now as the New York session starts to open too. So let's see what kind of moves we get there. And we can see here, even on the hourly, we're starting to get that nice expansion higher now as well. Yeah, S&P 500, yeah, could do 42.30. I think it's looking quite strong at the moment, isn't it? So let's see how that kind of plays out. But I hope that's been helpful, guys, when we're looking at that in terms of bias. If we have got any more questions, please do let me know. But play around with it. See how you get on with your bias when you're looking at the daily and the 4 hour and looking at the state of delivery. So where we're delivering from. We've got our 4 hour fair value gap here, for example. The fact that we closed above this was giving us the indication that we could then look to trade it, first of all, to this high, and then looking to attack these highs further up. We would take it down for the knowledge, we would take it down for the daily, to the 4 hour, and then we just decant those same principles down onto our executable timeframes as well. All right, guys, as always, absolutely love being here with you lot on a Monday. I hope it's been useful for you. Big shout out to everybody. Nitpar, thank you so much. Erica, thank you so much as well for the compliments. Definitely going to see you guys all on Wednesday. Hans, my man, always a pleasure. Yakuza Kana, great to see you on there as well. Amit, thank you very much for your contributions today as well. Moral, brilliant to see you as well. Hope the hairspray situation's going well. Learning. Apologies, mate. I missed your thing there. Can you tell me more about liquidity, boys? Yeah, so it's so in terms of liquidity, boys, I'm looking kind of more at fair value gaps. So you can look at volume imbalances maybe. With liquidity voids and stuff like that, I would always recommend really going to the source. And for me on that, that's ICT. I would say look into that, go online, type in ICT liquidity void, see what information he's got on that. It's not something I use personally. I focus more on fair value gaps and volume imbalances. But yeah, do get your head into that. And if you've got any questions, mate, always happy to help. Nit, obviously. Who else? Craigie boy, who's not here, had to shift off for work. Klaus, thank you very much. Great to see that picture. Really made me laugh as well. GOT, my friend Darnock, great to see you on here as well. Lil Bar as well. Bless volatility, absolutely. Our lovely Kelly Barker all the way from New Zealand. Josephine Crooks, was brilliant to see you on here as well, and thanks for the contribution. And to everybody else, Whack as well, who I know was on here earlier. Obviously, our lovely Erica. And everybody else. MM as well, who snuck in at the beginning. Happy Monday to everyone. Look, have a fantastic week. We're going to be back on Wednesday. Let's keep ourselves sharp. Let's see how price action plays out today. If the charts aren't giving you anything, you get the opportunity to go outside and touch some grass, do so. But yeah, let me know if you try this in terms of your bias and if it's of any good to you. All right, guys, have a fantastic week. It's an absolute pleasure being here with all of you, and I'll see you guys on Wednesday.